It's August, and we have another market update for you for the Austin metro area. I'm David Shapiro with the Shapiro Group here in town,
Lee Abraham.
and we're going to dive right into the stats. So, here is the number of active listings that we've been tracking, and you can see we're currently sitting at about 2,700 active listings. There is a drop over the winter, prior peak in the fall of last year, and you can see the hot market we had for the first half of 2022. Interest rates increased, and then that changed. And as you see, as we go through here, you'll see the stability we're seeing. That even though listings have gone up over the last couple of months, that with the inventory, we're seeing some stability.
Yes, David. So if you take a look at those 2,723 active listings and we measure them by the pace of sales over the past 12 months, we were selling 683 homes a month. That basically gave us about a 4-month inventory. Compare that to the 30-day pending sale numbers, which are much higher, 847 sales. That equates to about a 3.2-month inventory. The interesting number is the number of sales over the past month, closed sales, 650, which correlates to a monthly housing inventory of 4.2 months. However, spoiler alert, we're recording this on July 31st in the morning, and there is a significant amount of data that will be entered into the system over the next few days. So as we look at the number of closed sales over the past 30 days in that 4.2 month inventory, number of sales are going to go up once they're recorded into the system, and that monthly inventory will go down. So my forecast here as we look at this is that 4.2 month inventory really is going to look more like about 3.7, something like that, just shy of a 4-month inventory.
Okay, good. And so here you can see it tracked over time what the monthly housing inventory is. So they're sitting at 3.2 based on the pending sales is the one that we're looking at here. And you can see it peaked back in November, and we've been pretty stable, bouncing between 2.7 and 3.5 months of inventory for the past 6 months.
Yeah, and it is nudging up. So as current data is indicating, we are sitting right at about a 3.5 month because those pending sales, significant number don't close, and depending on how you look at the numbers. So I think we're at a realistic about 3.5 month inventory, generally speaking.
And then the number of sales per month, so showing down 13%, but this is going to change because
Right.
um, even when we record on the first or the third, of the month, there's still data that doesn't get entered right away. And so if we were to go back and look at last month, there was actually something like 90 sales that hadn't been recorded by the time we recorded our video. So that 873, if we're looking at last month when we reported it, was in the high 700s, and it came in, about 10% higher. So this should come in, at least 10% higher. And so this 13% year over year drop is probably going to be just a couple points once everything is said and done. So, which is a good sign because, if you look back over previous months, the year over year decline was actually higher than what I think it's going to end up being this
Yeah.
month.
Yeah.
And then the month will still be lower, which is interesting because if you look back at previous years, 2021, it was about flat. 2020, which was a weird year, so maybe you can't use that as an example, was actually up in July, but that makes sense because people started to be more comfortable leaving their homes and doing stuff around now in 2020. But if you go back to previous years, about flat as well. So even if this goes up and is about flat year over year, it's still going to be down month over month. So just not seeing as many transactions as we'd like to see. And I think that's going to pick up here in the foreseeable future.
Agreed. So here we look at the average sales price, and interestingly, the year-over-year delta is a little bit larger than it was last month. It's still in the range that we've been forecasting, somewhere between 5 and 10% year-over-year, and a marginal decrease of less than 1% month over month. So the real interesting numbers are going to be rolling around as we get into the meat of the third quarter and then into that fourth quarter. We'll really see what's happening as far as the direction of the market. We believe we will see an uptick as we get in towards the end of the fourth quarter in the average sale
Right.
price year over year.
Because, what Lee's pointing out here is that the average sales price for last November and December is significantly less than what we're sitting at for an average sales price right now. So potentially, if this number stays relatively stable, eventually we get to a year over year increase.
Right.
And here we have the number of days to sell. So again, keeps looking like a really big jump when we're looking year over year. But month to month, we're seeing stability here, and 40 days, not all that far off from what we were seeing, in prior years when the market was stable and a gradual appreciation.
Yeah, it's a healthy number for all parties that are participating in the market. 40 days is a very reasonable time to sell when you've got stability in the marketplace.
Yeah, and I think for sellers watching this, the thing to be aware of is you're not going to sell it over the weekend anymore. That is pretty rare. Plan for it to sit on the market depending on your area, somewhere between 30 and it could be longer. Like we just took a listing that's some acreage out in the country, and that's going to take a lot longer to sell than something strong city neighborhood. So it's just really hyper locals. That's where reach out to us. We can look at it with you and say, okay, in your area, this is how long you can expect for it to take to sell.
I will say, though, David, that anecdotally, some of the listings that we've been working with in-house, we've been fortunate enough to be selling them, not necessarily on the first weekend, but the second weekend. So I think we've had 4 recent transactions where the property sold in 15 days or less. And so it's got a lot to do with pricing it correctly, the property marketing that we use to get the maximum exposure for the property, a lot of variables involved. So new listings are down. And again, this is a partial function of the timing of the data. This number will go up, but not as significantly as the number of closed sales. So it's an interesting variable. It basically creates pricing stability in that supply and demand interaction, but we're anticipating this number will be going up over the next 3 months.
Expired listings, pretty much nothing to see here. So we just started tracking this to see if there would be a big change here in the market.
Can we call this the meh statistic?
Yeah. So once again, this really isn't showing much when we look at the expired listings. We started tracking it because we wanted to see with interest rates going up and seller expectations being really high, if there'd be a lot more expired listings because sellers were just like, here's my price. I'm not willing to sell it for less. And they've gone up a little bit, but really it's kind of a no story here. Nothing too extreme or worth really noting. So,
Right.
mass statistic, I think, is the right term for it.
The meh statistic. And then the opposite, the voodoo statistic, the sale price list price ratio. When you look at this, the interesting thing is that the year base that we're going from, 2022, is now moving out of that irrational exuberance that we saw preceding July of 2022, and it's right at about a full price offer sort of close scenario. And as we look at the second half of last year, you can see that dropping down to a point where we're actually higher in the current market at just under 98% sale price list price ratio.
Yep. I think this is all leading towards the story that like the market's crashing and we're in some huge decline is going to be over if you're hearing that in the news. I mean, we're seeing lots of stability, and that's good for both buyers and sellers, as we talked about last month. Okay, and our listing inventory barometer. So this is the most real-time statistic that we found to track what's going on in the market. And so just to quickly review, the 100% line is what we're looking at. And so anything below that means that we had more sales than there were listings for that week. And then above that means there's more listings so that the inventory is growing. So there's what we've been seeing over the last couple of months is a growing inventory, although not by a large margin, not like what we saw around this time last year when interest rates first went up. And all of a sudden, we saw a big jump in the number of listings, and then it kind of stabilized here. But just, stability with the market slowly growing, the inventory slowly growing. So you can see last week there's 238 listings, 202 pending sales. So that's a ratio of 118%. And you can see what that ratio has looked like all the way going back to April here.
Yeah, it's interesting. We can parse the market a variety of ways, and the size of the market, the gross sales volume, the number of transactions is really what's been impacted the most as opposed to values. So when the media is talking about market crash or downturn, it's important to note exactly what metric they're hanging their hat on. And so it's a fact that the number of sales are down, but the stability that we keep talking about has more to do with the equity position, the pricing, where supply and demand have both decreased in tandem, and that creates that sort of value stability that our buyers and sellers are also very concerned about tracking.
Yeah. And to your point about a crash, I think it's interesting that residential homeowners, like you're saying, their home values have stayed pretty steady some declines depending on the area. But really, what's happened with this transaction volume being down is real estate agents being affected because they're doing less
Yes.
deals. There's some real estate agents that have left the business because they just couldn't do enough deals to make a living. And then lenders really hit hard because, if you look at their business, 50% of it roughly was refis, a lot of them. And so refis have gone away basically entirely, right? Because now that interest rates are so high, everybody who wanted to refi was doing it when rates were in the 2s or even 3% range. And now that's over. So, and then now that transactions are down, so now their buyer business is also down. So some of them have lost 75% of their business. And so we know lenders that had a team of 40 a year and a half ago are now down to 5 people. And so that's where it's really being felt. And there's been a change in what the dynamic of real estate businesses that revolve around transactions look like. But those of you that are watching that you're a homeowner and you're wondering how this impacts you, like, that doesn't necessarily impact you directly right now because values have stayed pretty steady.
Yeah, I think, to piggyback on your point, David, with context and perspective influencing reality. So a lot of the news portals are getting their information from who? Real estate agents and mortgage people. A lot of them are not having a good time in the market because of that drop in volume, and that translates into that crisis feeling that is more felt by industry insiders that are transactionally based than consumers. And I think that blurs oftentimes in the message that's being conveyed through the media and through pundits that are industry insiders.
Yeah. All right. So now that was the city. And so we like to break this out with the city limits, the suburbs, everything outside of the city separate. A lot of times you'll see these numbers as the city and then the metro. And so you're basically lumping the city into the metro. And so it kind of blurs that. So I think it's really hard to lump a whole bunch of different cities that are surround Austin together because they respond really differently. What's going on in Dripping Springs is a lot different than what's going on in Del Valley. So we are lumping them together for this, though, because we can't go in and do 20 different market reports. But if you live in one of these outlying areas and you're wondering what's going on in my specific town,
Right.
then reach out to us and we can look at it with you and say, okay, you're thinking about selling, you're thinking about buying, here's what you can expect.
Absolutely.
But looking at the numbers as a whole, here we have our monthly housing inventory. So sitting at 3.8 months based on pending, 4.8 based on the last month. Lee, any thoughts on this one?
Well, one thing I would say is that just as was the case in town with the number of closed sales over the past month, this disconnect is more dramatic than in town. So you've got a bigger drop, as we'll see as we start getting into the underlying statistics. So that's one thing, which you see here. The other thing, David, just going back, is that it seems that the outlying areas got an extra half month.
Okay. Yeah, so here we have the number of sales down 22%. And this is the one that will change a little bit. Maybe I didn't look at outside the city limits for last month to see how much it changed from when we reported to today. But assuming that goes up a little bit, I think in the city was down 13%. So it's about a 9% difference. So figure that delta will stay the same. So the number of transactions are down more outside the city, even though it is more transactions on an actual number, right? 1,500 versus something like 650, I think we were looking at. So
correct.
There's more homes and more available housing stock outside of the city. Take this.
Yeah, so here we have average sale price, and totally in alignment with our forecast. We've got a 3.3% year over year drop, which is relatively minor, and a 1.9% month to month increase, sitting at about $525,000. David, one thing that I always like to point out to homeowners in particular is these are market numbers, macro numbers, and it doesn't mean that your house went up 1.9% versus last month or it's down 3.3% versus last year. We need to look at hyperlocal data for any specific house. These are industry trends, and the guidance here is that, number one, market's stronger than it was at the beginning of the year. That's true. If we're looking at comparables from the first quarter, we're going to make upward adjustments for date of sale and market conditions. So the takeaway here is that things are strengthening up and moving in the right direction for value appreciation as compared to,
Interestingly, the trend that the city was holding up better with the year-over-year price declines actually changed here. So it was like 6.8% year-over-year decline in the city, and it's only 3.3% outside the city limits. Interesting. I don't know if it really says all that much right now since these numbers have been kind of bouncing back and forth. So
As a data analyst, what I would say is that perhaps the smaller data set of the 1,500 plus closed sales allows for more deviation because there isn't enough numbers in the data set to prove out whatever the true trend is. So I would caution, reading too much into the numbers until they're vetted out.
and here we have the days on market. So this was the one that was a little bit more concerning to kind of see what direction it would go in. It's actually down month over month, so that's good to see because as you can see, we were starting to get pretty high here. And if that trend of 70, like we go back to 2018, it was under 60 days, and then it went down to 53. So if the trend had continued and this increased, we would have been a little concerned. But fortunately, we are seeing a decline month over month in the days on market. So that's good for the suburbs of Austin to see that.
Yeah, and I think when you're making sense of those numbers, just look at the rest of 2022 and how they step up to the current number of 60 in December, and now we're going to see those kind of crisscross, I do believe, and we're going to see that 60 drop just a little bit as we go forward into the next couple months.
Yeah, the next couple months. And then we have the normal seasonality of the holidays. So we'll see what happens there. So we
Right.
might see a decline here, and then maybe it ticks back up. I wouldn't be surprised if we tick back up to 60 again in December or something like that.
Right. And so new listings, David, are down both year over year and month to month. Fairly substantial numbers, almost 25% year over year, 15% month to month. We talked about new construction that's not reflected in the data for listings. It's only going to pump these numbers up a bit. And so, yeah, we'll keep an eye on it. What we don't want is the numbers to be moving in the other direction, quite frankly. You don't want rapid increase of the number of new listings hitting the market unless, of course, demand is keeping pace. That wouldn't be good for equity positions. Values would begin to slide. And so we would like to see this go up a bit, though, and I'm anticipating that it will next month. And then the sale price list price ratio. Is it possible to actually measure 1/10 of anything, is my question, let alone a real estate market? So what are we looking at? We're looking at 100% compared to 98. Pretty darn close, relatively healthy.
So to summarize, if you're a buyer and you're thinking about, is it the right time? Should I wait? Interest rates just went up another quarter point. Is that going to impact me as a buyer? I think the important thing is that the window for you is going to close at some point where other buyers are going to come into the market and it's going to get really competitive. And we don't know when that's going to be. Is it going to be in 3 months, 6 months, a year? We're not sure. But what I do know is if you're planning on owning a home for 3+ years, that we can look into the future and say that in 3 years, it's really likely that prices in Austin are higher than they are today. Why is that? Well, inventory is really low. We're not keeping up with what the demand is going to be. And that we can say it's the same trend we've had over the last decade. We had a little bit of pause because of what's going on with the macro environment, but that's going to come back in and things are going to be like they were, not in 2021, because that was an anomaly, but going back to years like 2018, 2019, where there was steady appreciation. And so I think there's a window here for buyers where they can not be competing with as many people as they will in the near future. So if you're a buyer, I'd say start planning, figure out when you can buy. You want to focus on finding the right home for yourself, whether it's an investment or for your family. And then at some point down the road, if interest rates drop, you can always refinance. So maybe you don't count on that entirely, but make sure you buy something that you can afford at current interest rates, get a 30-year fixed rate. Maybe you go with an ARM, adjustable rate mortgage. If you can get a half point or 3/4 of a point better rate on that, give yourself at least 7 years with that lock. And then you have an opportunity to refi if rates do come down. So focus on finding the right home and take advantage of this opportunity. If you're hearing a lot of FUD, fear, uncertainty, doubt out in the market, it's by design. Just focus on your lifestyle, finding the right home for you, and take advantage of a market where there's less buyers that you're competing with. If you're a seller, well, we're seeing that values are holding pretty well. And when we're being very strategic about listing your home with the listings that we put on the market over the last 2 months, we've seen really good success if we price the home properly. Homes that are overpriced or they're not staged properly, they don't have good curb appeal. Some of these things that we can easily do and strategize with you when we're talking about listing your home, where you can invest a couple $1,000s and get much more than that back because we sell the home for a higher price, we move it more quickly. Those things are things we can strategize on and move your home quickly. So Lee said earlier, we've had 4 homes in the last month that we listed and sold with under 15 days being on the market. And the sellers were really excited. We looked at the comps, the values were strong, they had equity, and they're all excited about moving forward and selling those properties. Some of them were investments, so they had the flexibility. They didn't need to go buy something else. Some of those were owner occupied. But in all cases, we were able to get them under contract relatively quickly, and we set the right expectations of how long it would take. So I think there's a good opportunity if you're thinking about selling, about us talking to you and seeing if that's the right move right now. Now we have talked to other people, and based on what they're looking for, we decided it isn't the right time to sell, and we should push that off until later. So that is a case by case based conversation. So we're happy to have that conversation with you. Just go down into the description. You can book a call with Lee or I, shoot us a text, an email, whatever works best for you, and we'd love to chat with you more. Overall, we're excited about the future in Austin. There's a lot of growth ahead of us. There's still people continuing to move here, companies continuing to relocate jobs here, and that's really the main driver of growth and home appreciation. We foresee a steady appreciation growth moving forward, and not the crazy 12, 15% appreciation that we might have seen in past years, but the 3 to 8% that was standard over the previous decade prior to 2020. And so we believe in Austin, and if you have questions, we're here for you. Don't hesitate to reach out. If you got a lot of this video, please share it with a friend, give it a like, and we look forward to seeing you on the next video.
Thanks, everybody.